Our panelists today include Sophia Crisp, Executive Director of Housing Consultants Group, Dr. Jung Choi, Senior Research Associate, Housing Finance Policy Center at the Urban Institute, Lauren Lowry, Director of the Housing and Community Development at the National League of Cities, Joshua Devine, Director of Racial and Economic Equity at the National Community Reinvestment Coalition, Michael Wallace, Vice President of Business Account Management Solutions at Fannie Mae, and Samuel Gunter, Executive Director of the North Carolina Housing Coalition. Thank you all for joining us today. And we'll begin in order of Sophia Crisp, Dr. Choi, Lauren Lowry, Joshua Devine, Michael Wallace, and Samuel Gunter with some opening remarks.
Well, thank you, Stephen, for having me, and welcome everybody. Hope we have a great session here today. My name is Sophia Crisp. I'm founder and executive director of HUD Certified Housing Counseling Agency Housing Consultants Group. I've been a realtor almost 30 years, which brings a kind of unique perspective to the work that I do here in Guilford County, North Carolina. We are also the provider of homebuyer education as well as financial wellness education in Guilford County. So I'm hoping to have a great discussion with you about what we're doing locally and some of the stuff that the National Association of Realtors is doing to promote Black homeownership. Thank you.
Choi.
Yes. I'm just gonna quickly share my screen. Can everybody see this? Just turning. So I'm just gonna I'm gonna be quick because of half of the things that I mentioned. Stefan also talked about it already. So this shows the racial homeownership gap, and this slides just highlight that Black households in particular, even if you control for income, have a substantially lower homeownership rate.
Where's your restaurant?
Wait, can you see the slide or?
Yes, we can see the slide. I had to mute some background noise.
Yeah, so in a similar income bucket, Black households have significantly lower homeownership rate. Even among those who earn more than $150,000, there's about 10 percentage point gap between Black-white homeownership rate. And this slide just shows that the Black households are experiencing a greater decline in mortgages, more than double the rate of white households. And also, even if you control for income bucket, the denial rate for Black households are significantly higher. So this leads to differences in median wealth, as Stefan mentioned, but I also want to point out that even among homeowners, Black households are likely to own a home that have significantly lower home values on average, which also leads to differences in the wealth. And during the pandemic, we also saw that the refinance rate surged because of the lower interest rate, but then Black households were more likely to be denied of refinancing, and they were also less likely to refinance on their mortgages. So a lot of them missed their opportunity to refinance to a lower rate and build wealth through the lower mortgage payment. And what also happened during the Great Recession is that the credit lending standard, after the Great Recession, the lending standard became tighter. So it became more difficult to access home ownership. And one of the greatest reasons that the Black households are denied for mortgage is our low credit scores or lack of credit histories. And this graph on the right side shows that a greater share of Black and Latino households have those who do not have a FICO score. So about 30% of Black households do not have a FICO score, and about 34% of Black households have FICO score below 620, which makes it more difficult for them to access mortgages. And we know right now the home prices have surged and the interest rates are also going up. So there's been some changes in the market environment. And my final slide just points out that there's this significant lack of supply, which has increased to a decrease in number of active sales on the market. And there's also been rise in competition. So we do see that especially the cash buyer share has risen in the recent couple of months. So there's about more than a third of homes that are purchased through cash buyers. So I'll stop there and pass it back to Stefan.
Thank you.
And looking forward to discussions.
Lauren.
Yes, hi, my name is Lauren Lowry. I'm the Director of Housing and Community Development at National League of Cities. National League of Cities is the voice of America's cities, towns, and villages, representing more than 200 million people across the country. Our mission is to strengthen local leadership, influence federal policy, and drive innovative solutions. Our membership base is over 2,600 cities, towns, and villages in 49 state municipal leagues. In the area of focus that I focus at National League of Cities is affordable housing, housing stability, homelessness, and community development. Thank you.
Thank you, Lauren. Joshua.
Hi, everyone. Joshua Devine. I head up our racial economic equity team at the National Community Reinvestment Coalition. NCRC is true to its name. We are a coalition of some 650 plus community and economic development entities who are advocating for fairness in housing and lending small business locally. We leverage our kind of staff expertise in policy and organizing and research and others to really ensure that this work is happening impactfully and effectively. We have a pretty strong policy shop. We do some fair housing and fair lending work. We do housing counseling networking, we have a housing counseling network that advocates to strengthen capacity in that realm. Some research stuff. We have a community development fund, all sorts of things to ensure a just economy. I'm fortunate to work to center this work around race and wealth. So we do a lot of research related to homeownership, particularly expanding homeownership for Black Americans. We are critically analyzing the Home Mortgage Disclosure Act data and reporting out on equity implications there. We have a fair lending tool that really supports our members in understanding the landscape of lending in their communities. And we're working critically to think about expanding homeownership, kind of reaching that 60% majority homeownership for African Americans over the next decade, and also thinking geographically about how that might happen. So excited to join this conversation. Pleasure to meet you all.
Thank you, Joshua. Michael.
Thank you, Stephen, and thank you, everyone. And happy Juneteenth weekend. How appropriate that we're having this conversation today. As Stephen mentioned, I'm Michael Wallace. I'm a VP at Fannie Mae. For those of you who may not know, Fannie Mae was created out of Franklin Roosevelt's New Deal. The idea was to supply liquidity to the housing market in all economic markets and really drive affordability. It's through this original mission that the 30-year fixed rate mortgage came into being. And actually only a small number of countries in the world have such a product today. One that provides for affordable payments and when bundled in securities is a very attractive investment. Our mission is focused not only on homeowners, but also on renters through our multifamily business and is supported by investability, safety, and soundness. Just last week, we released our Black homeownership journey, which was a bit of research, which I'm happy to say, based on what I've seen so far in the discussion before the big group joined, we're very much aligned on some of the statistics. So that makes me really comfortable with the stuff we're going to be talking about today. Our plan focuses on 4 key factors that influence the home buying process for all people, but specifically highlights the specific challenges for Black borrowers. In addition to that, we will be highlighting some things. I'll highlight some things in the plan that we hope will really make an impact. But clearly, we can't do this alone. So I'm super excited about all the energy that exists around this topic today. And sort of from a personal standpoint, just to give a shout out to Fannie Mae, I can tell you that of the 7,500 people that work at Fannie Mae, what really drives us and gives us fulfillment is the mission. So I'm very excited about the opportunity to sort of share with this group what we've been working on.
Thank you, Michael. Samuel?
And I'm Samuel Gunter. I'm the Executive Director of the North Carolina Housing Coalition, and our mission is to lead a movement to ensure that every North Carolinian has a home in which to live with dignity and opportunity. And a lot of the strategies that we deploy are focused on growing the housing movement so that we can win the kind of policies that we need, backed by the resources that meet the scale of the need. And then strengthening the ecosystem of providers that make sure the resources that we put in place, the policies that we put in place, reach the folks that they're intended to reach, right? So we were called into being in the mid-'80s, along with a number of other state housing coalitions as a response to the retreat of the federal government during the Reagan administration when it came to housing investments. And many coalitions like ours spun up to beg state governments to step into the gap, right? So we were called into being in the 80s around the creation of the state's housing trust fund. And that's a lot of our history. Now we do a lot of policy and advocacy at the State General Assembly and with our federal delegation around housing policy, increasingly working more with local governments on local policies that pursue affordability. We do things like we engage with NCRC in community benefits agreement around CBA tables with banks. But we also are an intermediary for housing counseling agencies across the state of North Carolina. So we're connected from the policy end all the way down to folks on the ground doing the work. And I'll say my background, in addition to doing policy work and working at a Habitat affiliate, so coming out of the homeownership space, I'm also a pastor. And so I spend a lot of time both on the political front, but also on the interpersonal front, thinking about what moves people, right? What moves you from something to something else. And I'm excited about the conversation that we're going to have, because one of the things that we continue to realize is that data is important. It's also not a call to action. And so how do we take this data and how do we move political will to get what we need?
Thank you. Our first round of questions deals with the problem and the current conditions of African-American home ownership. Rates peaked in 2004 at 49%, and since then, the rate of home ownership has dropped to about 43% of African-American households. Meanwhile, white household home ownership rates have risen to about 74%. Why does this matter? What are some of the causal or contributing factors to this decline? And this is an open question for any of the panelists who want to jump in.
Well, Stephen, I think I'll jump in first. I think one of the key factors is credit. And Dr. Choi mentioned that in some of her slides. Credit is a huge factor, and lack of knowledge about the home buying process. One of the things that we strive to do in our education is help people navigate that process and meet them where they are and get them to home ownership ready. We recognize that credit being the key challenge is the thing that we focus on the most. And based on what a client's credit score is when they come in Housing Consultants Group, is we walk them through the process and put them in whatever educational service we have that meets them at that level with the goal of getting them to the next level. So pretty much if people are willing to do the work and work on their credit and understand spending behaviors, we've had a very good success rate with getting people home ownership ready.
Hey, Stephen, I'm happy to jump in. If you have it available, could you put up
Sure.
the deck? I have slide 5. Again, when I was hearing other folks talking earlier about some of the data that sets the stage for the problem that exists in the Black borrower journey specifically. Again, glad to hear a lot of the numbers were the same, not glad about what the numbers were telling us. But I did want to share with the group. And by the way, this presentation we can send out afterwards too. So if folks are interested, they can. We'll be sending that out afterwards. But hopefully, are you sharing, Stephen?
I'm working on it.
Okay, yeah, no problem.
Unfortunately, I had it pulled up on the other computer.
What Stephen's going to show is kind of a complement to what Sophia was just talking about with regard to the journey and some of the challenges that exist for Black borrowers in particular. But I wanted to highlight what the journey looked like first, based on our research and sort of what our thinking is and how it sort of sets the stage for what Fannie Mae is planning to do to help narrow that gap from 30% down. I could say more and draw it out. So I could try to share. Oh, look, there he goes.
Got it.
All right. And it's slide, that one right there. Thank you very much. So as everyone hopefully can see,
Yes.
we basically broke out the journey. And again, this is applicable to anybody into 4 stages: the housing preparation, renting or buying, move in and maintain, and then finally move or sell. Seems pretty simplistic. But there are key things that are identified in each one of these processes or phases that are important for us to understand first, and then think about actually, can you go down one?
Certainly.
2, I think it is, because or the other way. Sorry, because I don't want to go straight to the stuff that we're going to do until I set the stage. Sorry. So you've got the early education experiences, and Sophia was exactly right. One of the biggest, I think, obstacles for Black borrowers has been, and all borrowers, but I think it's been more important in minorities in general, but Black borrowers in particular, is just understanding. Like, how many of you guys remember we used to take home economics back in the day? And it wasn't just about how to cook, how to boil water and stuff, but it was how to build a budget. So a lot of that very rudimentary stuff we've put on parents, and parents are busy. So a lot of times that education doesn't get done. So early education is, to me, I think, a huge way that we can impact generational change, but that's not a silver bullet, and it's certainly not going to change things overnight. Then you can see in phase 2, we break down, the steps through renting as well as buying. We've got some things that we think we can focus on from a policy standpoint, in partnership with leaders in other parts of the industry to really drive some impactful change there. And then this is the other part that a lot of times gets forgotten. It's the move in and maintain. How many folks are prepared when that air conditioner goes out? We all know right now with the heat the way it is, man, if your AC goes out, you're in trouble. And how do you deal with that? And a lot of times borrowers will retreat. They won't proactively engage their lender for any type of assistance or help, or even just to let them know, which is really the opposite of what they should be doing, because there are oftentimes ways that the lender servicer can help a borrower. So this is what's sort of framing in our mind what the current state looks like from a phase standpoint. And then when we move into the second round that talks about some other stuff that we're thinking about, hopefully some of that will resonate with folks on the call.
Michael, I love the fact that you're thinking about that span or spectrum of the housing field. It's really great, particularly as you're pointing out the emphasis on preparation and even renting, leading into selling and even maintaining your home. Love that. I just want to underscore here, Stephen, you mentioned why does this matter and what are the causes? I just want to make sure that it's clear about just our nation's history of housing discrimination, and predatory lending in low to moderate income communities and home buyers of color, and how that has led to the desperate landscape of housing that we see today. We can talk about redlining, we can talk about restrictive governance, we can talk about predatory lending, but that impact is still happening, or the effect of that we're still seeing today. The housing gap is also a reflection of the kind of unequal access to economic opportunities for Black Americans. So Black households lack the necessary income to strengthen their credit profiles or to actually invest in home ownership, right? We know that there's an overconcentration of lower wage positions for Black Americans, right? So that this precarious financial condition of Black Americans continues to be a persistent challenge and need in closing that wealth gap. And of course, we see the need to think about investment in communities of color, particularly low-income communities who have persistent poverty, and how that lack of investment, the lack of direct or targeted investment, leads to issues such as housing supply shortages and the devaluation of homes, for example. So these are complex issues that we all have to make sure that our policies and programs are responding to comprehensively. And I'll also just add one final note that housing and homeownership matters because Black Americans rely heavily on housing as their primary source of wealth and wealth accumulation, which is different compared to maybe higher income or white Americans who have a much more diversified wealth portfolio, right? So the impacts on the housing market, the impacts on access to housing really disadvantages Black Americans who are interested in thinking about wealth growth and accumulation.
Ask a follow-up question on this, and it's related to that difference in markets for African American and white borrowers. Funding source sometimes becomes another point of discrimination. Cash versus loans versus down payment assistance programs that might act as a barrier for minority home seekers, especially in our current market conditions. Have you seen this in the data that you've observed, in the programs that you've been implementing? Does funding source matter?
Yeah, I can start that. And I think just during my introduction, it's very clear that Urban is heavily data-driven organization. But then we totally agree that actions, or we're kind of like sort of providing these data to kind of help the action makers have correct information to work on. One of the things that we saw during the pandemic is that the share of FHA loans have declined. So that's the major reason is like there was one data that I showed that the days that the properties are on the market has also declined, suggesting that there's greater competition and there's like more increase of cash buyers coming into the market. So FHA loans, it actually takes longer process compared to like cash buyers or those who have access to conventional loans with because they have more financial resources. So sellers are more unwilling to provide an opportunity for FHA home buyers to purchase the homes. With that said, greater share of Black households actually buy their first homes through FHA loans. That means that this kind of change in the access to capital and like that actually has a disproportionate impact on minority households, in particular Black households. And also we've been doing some research on down payment assistance, and what we found is like a lot of down payment assistance have income restrictions. So but then the problem is that the low income households right now cannot really compete with the cash buyers. So we talked to a lot of down payment organizations saying that they actually for the first time have some funding remaining because they can't really have any clients that they can serve during the pandemic. And again, this is also disproportionately impacting those who do not have like sufficient wealth or are wealthy parents that can support them to buy a home with like family down payment, indicating that and again, down payment assistance program, it takes longer time to process, like there's documentation. So in this current market, when everything is happening so quickly, those population who needs extra support in like getting down payment assistance or applying for FHA mortgages, they're actually being negatively impacted in the housing market and having more trouble accessing homeownership.
And I'd like to piggyback off what Dr. Choi said. We happen to be the provider of down payment assistance in Greensboro. And once again, because I've got that realtor background, we were a part in looking at guidelines to make sure that we were advocating more than restricting people with down payment, as well as we also provide some education to lenders and realtors about down payment assistance and who's a better candidate for it. But the big thing is, and you mentioned it too, the FHA loan is unfortunately being used to limit who has access to housing. Cash has been an issue as well. And then of course, the hedge funds that are buying the properties cash, they come in, buy sight unseen, and have come in with a higher offer, and then they can close quicker. So all things that sellers want to have happen. So one of the things that we've done very intentionally in our classes lately, probably the last 6 months because of the lack of inventory, is change the narrative about how we're talking to potential home buyers. One, you need to, while you're waiting on that house to become available, make sure you're continuing to maintain your credit and work on improving your credit so you have access to all kinds of lending products that make you more noticeable when you make your offer and make the seller feel like you're a good choice because of the type of loan you're getting, because FHA also requires more repairs to be done than say a conventional loan. So those are all things that realtors have to in support of their seller share. So we just try to make sure that while people in this current market are waiting, that they are maintaining and improving credit so they have access to all lending products, and don't let the lending product that you're eligible for get you ruled out of an offer as opposed to being just as good a candidate.
And I have a quick point just to put on what Sophia was sharing in specific around down payment assistance. So, from the perspective where I sit at Fannie Mae, looking at scalability, if you think about the fact that there's so many communities that have their own individual down payment assistance programs, there may be county, there may be state, there are a mass amount of down payment assistance programs. And right now there's very little, if no, structure around how they're structured. And so then it means each one, if you're going to come conventional, which is what I represent, then you've got to make sure, then all of the lenders have to understand all of the ins and outs of each down payment assistance program in order to understand whether or not that's a loan that's saleable to the GSEs. And so one of the things we're working on is there a way that we can drive some consistency in how down payment assistance programs and shared equity, because that's another huge one really on the West Coast. But how can we provide some structure and get those to a point where they can be scaled much better than how they've been in the past?
And follow up, we've heard a lot in the news lately around student loan debt as student loan debt forgiveness is being considered. A recent poll conducted by the Research Policy Impact Center found that while the rate of repayment was similar between white and Black borrowers, the incomes of white and Black borrowers were about $20,000 difference on average per household. That meant that the debt to income ratio was much higher for potential home seekers in the African American community. Have you seen debt to income ratio, student loan debts as playing a role in this?
So
yes. Sorry.
Sorry. You go first.
No, go ahead. I'm sorry. I just was being funny.
Yeah, we actually talked to Fannie Mae about this too a couple of weeks ago, but then, so it's also similar narrative of like homeownership trajectory, and also it's like at the time of entering into college, Black young adults are less likely to get family support. So we actually have some data showing that with similar level of education, Black young adults are more likely to have a student loan debt than white young adults. And it's not just a DTI problem. Another problem is that unfortunately, Black young adults are also more likely to drop out of college education. And then there's some research showing that those who drop out of college but then have student loan debt, they are most struggling to become homeowners. And another statistics shows that Black young adults with student loan debt are more likely to default on their student loan debt, which affects their credit scores. So it's not just the DTI, it's actually affecting their credit, it's actually affecting their ability to save for down payment, because with lower income and more debt, that means it takes more time to save. And again, they are less likely to have some family support at the time of purchasing the home. So there's multiple barriers that the young adults are facing when it comes to obtaining higher education and also buying homes. And currently, very sad statistics shows that the college graduate young Black adults, the homeownership rate is actually lower than the white young adults who have not completed high school. So this really kind of emphasizes the fact that young adults, Black young adults, even if they really kind of trying to get more education and like really kind of save up for the future, like from the beginning, they actually face a lot of barriers and in not only accessing homeownership, but then also like getting financial support to carry on with their education.
Just want to note a data point that the National Association of Realtors released around student debt. It noted that folks with student debt purchase homes at less, maybe I think 19% less in cost than other buyers. And this has implications not only on the likelihood of folks with student debt to actually purchase a home as home prices rise, as the market rises, but also the long-term implications on wealth, right? When you purchase a home at lower value, to my earlier colleague's point in our presentation, that has implications on wealth and wealth growth and accumulation over time.
And just one more comment on student loan debt. One of the reasons that I do the work that I do has to do with not having student loan debt, and the fact that my parents, if you can think back to your 10th grade social studies, were part of that mass migration from the South. The Blacks that were born in the South went up north to work and then came back. But when they went up north to work in New York, they bought a house on Long Island, which I got a story about Long Island and some discrimination, but they bought a house on Long Island, turned it into a duplex. No, actually, they bought the house in Queens and turned it into a duplex and moved to Long Island. But that duplex allowed my three brothers and I to go to school debt free. So when I talk about home ownership, it's not just where you live, it's what you do with it. And it is a wealth generating vehicle that has a lot of implications, not just where you live. So that's the story that kind of motivates me to do what I do and how we share in education with people. It's more than where you live, it's what you do with it. And to your point, Joshua, it is a wealth creation vehicle that pretty much the only thing that the Black community has.
I'll say one of the things, like I was saying before, I spend a lot of time thinking about how to shift political will, right? How to talk to people. One of the things that, both from my time as a pastor and my time as an advocate, you got to be honest about your own story, right? I think we do a lot of magical thinking about how we got to where we are, right? And so to piggyback off of Sophia sharing hers, I come from 2 generations of homeowners. And I was able to purchase a home in spite of carrying quite a bit of student debt, precisely because I had help from my parents, right? And my parents were able to have help with their home purchase because their parents helped out. And their parents were able to purchase a home because of the GI Bill. And it's this part of that history, right? Tracing that narrative. And because of that slow drip, right, that home ownership, that wealth building is a slow process when it comes to home ownership. And so the story of decades ago is very present today.
Let's move now to talking about some of the things that your organizations are doing to address the issue of disparities in home ownership, whether it's by research, policy advocacy, or direct service programs. Who'd like to begin? Lauren?
Yeah, thank you. I think since 2019, National League of Cities has taken a real focus of centering our research through a racial equity lens, which has been really important to begin to really address how we address the housing supply issue. And with the research that we're doing, we're looking at how to look at local policies comprehensively. Sometimes we just focus on one policy, thinking that could be the solution to everything, but taking into consideration things like zoning, property tax assessments, home ownership appraisals, taking into consideration even the funding sources that are available, be it general fund, community development block grants, or federal funding, and helping local elected officials as well as housing policy staffers to really begin to address the racial wealth gap and the gap in home ownership. So just really taking an intentional approach, because for so long, we didn't really think about the end user. We thought only one solution was the best solution forward.
Stephen, I have a litany of things on slide 6, if you want to pull that up, and I'll go through them fast. And I know we have time at the end for questions, and so we can ask, let questions happen then. Slide before, maybe the number's off. There we go. So as I mentioned before, we have those different phases that we've identified, and so we're trying to do stuff in each of those phases to have meaningful impact. When we think about housing preparation, we both represent single family and multifamily, as I mentioned before. So rental payment reporting, this is something we just released back in the fall of last year, where as a part of our data validation services, which a borrower can tap into once they provide their credentials for their bank to the lending officer, or not to them directly, but through a portal. Then we're able to look at their bank statements to show when they made their rental payments. And so they're getting credit for that where it wasn't on the credit report before. And so we've seen a big jump in approved eligibles for borrowers who provide that information for the lender to validate. On our multifamily side, we're looking at some things to help defray the cost of security deposits, which obviously is a big, can be a big dollar amount for renters. When you move into the second phase, whether you're renting or buying, access. One of the things, and we could probably spend an hour talking about this, so I apologize, I'll hit it quickly, but special purpose credit programs. This is something that had been used 10 plus years ago, had been forgotten about largely through the crisis. But now it's coming back into vogue, and we are looking at ways to be specific about these programs. And our first focus is in 6 metropolitan areas where we've seen the biggest diversity or biggest spread or gap between white and Black homeownership. And so we're really laser focused on getting these special purpose credit programs piloted with some of our lenders initially so that we can get learnings from that and then scale that out. That's important. Because a lot of lenders are like, well, how do they get it and I don't get it? Well, we need to have partners who can provide us enough data and information to understand how to scale it for the masses. So that work's going on. Another one that's really big is valuation modernization. So appraisal discrimination, if you will, is another very meaty topic. Our belief is that if you stick with data and base your decisions off data and not subjectiveness, that you're going to have a cleaner transaction and a better transaction for everybody. So we're working on ways to leverage data better and provide either appraisal waivers or getting some additional data and then allow not to have an appraiser go out, because sometimes they can be everybody's influenced by their own experience, and so to the extent we can, sort of reduce that, I think that's a good thing. Addressing insufficient credit, cash flow underwriting. This is another thing that, this will be, to me, the sort of the wave of the future. And this is for all borrowers, so not just specific to the Black borrower. When borrowers are more and more comfortable with providing their credentials for their bank, and we can see bank statements, the more data we get there, the old 28 and 36 for 28% for your mortgage, 36% for overall debt, or even 40 45 now, that those numbers may go away, and we might be looking at real cash flow and what people can afford based on their cash flow as a much better means to approve borrowers. Enabling diversity, I mentioned the appraisal diversity initiative. We're also looking, we're doing it. We have a program called Future Housing Leaders, which we're focused on being sort of a broker between colleges and universities. UNCG is one of them. I got really involved in that one specifically, where we're identifying students who, diverse students who we can attract into the mortgage business, because if you look at the demographics of the mortgage business today, they look a lot like me, and they need to look a lot different. And so we're hopeful that this program will provide internships for these students and get them excited about entering into the mortgage business. And then education. We have our own program that we just kicked off a couple of quarters ago called HomeView. It's a end-to-end counseling program that we offer specific for our borrowers. And so it's a really exciting thing as well. So again, I could go on for days with this, and I don't want to monopolize time, but just know that this plan that just was released with a lot of stuff we're very excited about focusing on. Again, can't do it alone, and there'll be that a call to action for folks later on. But and also, if you have questions, I'll be around to answer them.
So Stephen, I'll jump in here and share what we've been doing in Greensboro and Guilford County. And it's kind of weird because something really bad happened in 2018 in Greensboro. We had a tornado. And in 3 minutes, people's whole lives were changed. Over 1,000 people were affected. And overwhelmingly, we noticed as the National Association of Realtors and NC Realtors jumped in to help with rent and mortgage assistance, that a huge number of them were renters. There were 600 renters affected by the tornado, and the tornado hit down in the poorest zip code in the whole city. So recognizing as a housing counselor that it's hard to coach people when they're in crisis, we addressed the crisis and moved to 2019. And then we launched something called #100Homes. So as the provider of down payment assistance in Greensboro, we launched #100Homes, targeting that zip code, which is a large minority population, but of course it was available to everybody. But we were wanting to know, out of those 600 renters, could 100 of them become homeowners? Well, we helped 317 people become homeowners. And that was in 2019, 2020, even during the pandemic, we helped 347. And last year we helped 253. So we're at almost 1,000 new homeowners with down payment assistance. And I'm happy to report that 68% of people that access that down payment assistance are African. So we're happy about the numbers by just what happened and the fact that everybody wanted to be a homeowner who was eligible was able to partake in up to $10,000 in down payment assistance. And those efforts continue, but we were happy to help people in that zip code in particular. And a lot of African-American families were able to become homeowners with the assistance of that program.
Great.
Do you know offhand, Sophia, how many of those homes were conversions from rental to homeowner? I know that looking at the statistics for the neighborhood prior to this, there was a high rental proportion.
Oh, yes. Yes, most of them, most of them were renters. And so you've got the city investing in home ownership, a large number of Black families becoming homeowners, and then they're contributing to our tax base. And of course, the statistics on how children learn if they're in a home that's owned by their family. There's just great things happening. And it has continued. Now, the inventory being low is a problem now, but we were happy during the last 3 years to help that number of people become homeowners.
Joshua, this might be a question for you. We know that one of the issues with African-American borrowers is basic banking services, that there's just not access to banking in many lower income, moderate income neighborhoods. Do you know what's being done with CRA funds around this?
Sure thing. That's a great question. NCRC recently released a report on bank closures, where they highlighted that not only over the past 5 years have, I think it was 9% of branch locations in the US closed, but that branch closure rate doubled during the pandemic and disproportionately impacted low to moderate income minority neighborhoods. I think 1/3 of those branches were in those particular neighborhoods. So we're thinking critically about how, as bank mergers happen, as artificial intelligence or the growing reliance on online banking makes its way into the market, how do we make sure that there's still access to financial services and inclusion? I think there's a few things that we could advocate for or continue to advocate for. It was mentioned earlier about special purpose credit programs. So really working with our banking institutions to one, understand that this program exists for you to utilize as it historically has been underutilized, and really innovate in the space around affordable banking products and affordable loan products to support homeowners and home buyers. I think just amplifying the issue that this still exists is important, but also getting banks to think about geographically their footprints or their markets they're currently working in, and how they can maybe extend their work, their lending, their service to those markets that they aren't measuring or they aren't kind of working in, or those that may not make any kind of business sense for them, but would engage in or facilitate kind of social impact and outcomes. So we're working. And I think NCRC, with our work around community benefits agreements and getting banking institutions to commit to a particular amount or a particular metric over the next 5 to 10 years, I think that process can really help support some of the work on the ground.
Thank you. This follow-up is probably for Dr. Choi and Lauren Lowry. What research or data is needed that we don't already have that would help us better understand this gap in home ownership rates? I work a lot with Housing Mortgage Disclosure Act information, and I know that it's flawed. It leaves a lot of holes in the questions around lending disparities. What needs to be done?
In terms of HMDA data, I think we would love to have the credit score data. I know it's collected, and as I mentioned earlier, credit is one of the most cited reasons why the mortgage is denied. But then the publicly available HMDA data does not release credit score data. And we're also kind of doing some research on special purpose credit program, and it will be really beneficial for those like mortgages that are denied, like what their credit score distribution looks like to kind of inform the lenders what to do about this population. So that's the data that we would really love to have. And another thing is that we're kind of finding that a lot of the local communities are really trying to design and implement their own programs and also lenders to increase Black homeownership. But then right now, there's like the data is lagged in terms of like following tracking Black homeownership over time. So census data does release their quarterly data, but then the problem is that the sample size is really small, so the data is very, very volatile. So the numbers go up and down every quarter, and sometimes the report media just says like, oh, Black homeownership actually increased this much this quarter, and the next quarter it says like Black homeownership fell. So it's, and then the problem with it, as Census also realized this and mentioned this, especially during the pandemic, they had real difficulty collecting the data because it was more difficult to collect enough sample size during the pandemic. So the data quality did improve slightly over time, but then the CPS data, which is more like a regular home ownership rate data, is less reliable right now, which is concerning. And even the annual data, the American Community Survey data that was just released, the 2020 data, the census also reports that this data should not be compared with the prior year data because they also had some trouble collecting the data during the pandemic. So we would really love to have like a timely data that tracks the increase or decrease in Black homeownership over time to see if we're moving towards the right direction. I know some of the, I know Fannie and Freddie have some data that can sort of help us to understand the changes in Black homeownership over time, but then it's very difficult for also the GSEs to release this data. There's like complicated processes. So we're discussing the potential of like getting more timely data on the changes in Black homeownership, but it will take some time.
I want to jump in here on that question because we put together county profiles of affordable need for affordable housing need for every county in North Carolina, and saying challenges with the ACS data and it really lagging and not reflecting kind of urban markets that have changed drastically in a short period of time and all of that. But here's the big caveat. No one cares. Data is, you're not going to get the perfect data to convince people. We're never going to get to a point where, okay, we finally have the most precise version of an answer and now the solution is coming. So data is incredibly important. You can't come into these policy conversations or political conversations without data, but data is not going to get you over the hill, right? And so I just want to add into this again, the narrative is incredibly important. And I think one of the challenges that we get locked into, especially when talking about homeownership, and like I said, as an organization, we're an intermediary for housing counseling agencies. And that educational work is incredibly important because navigating systems on any day is a complicated thing, right? But there is no amount of education that is going to get over the hump of a bad system and a system that was not designed for, right? And so being able to tell that story, because when I'm having conversations with elected officials at the local, state, or federal level, everyone's got this example in their mind of who gamed the system, who really didn't deserve to get the help, who whatever, right? Or the people who, well, their real problem is we all joke about avocado toast and whatever, right? You're making poor personal financial decisions. And one of the things that I have to constantly remind people at a systems level when we're making systems level decisions is even if this hypothetical example that you've come up with were true and they made terrible decisions, fine. But if that same family made great decisions, the system still might not have served them, right? And so some of the things that we're addressing are, and we're sitting with homeownership as, and working in housing as we talk about broader systemic challenges due to our long history of racist policies that cover every system we've got, right? Homeownership is one of those that is the easiest data point to draw out like a cost, an actual dollar cost to what that means for a community over time, right? So the data is incredibly important, and I am constantly frustrated, whether it's eviction data, whether it's that it's not timely, doesn't accurately reflect the existing environment. It's hard to make policy decisions that reflect what's happening on the ground. But Our challenge is not policy decisions, our challenge is political will to change systems. And that data isn't going to get you over the hump. You've got to be able to bring something different to the table there.
Go ahead, Josh.
No, please, Lauren.
I think from a local perspective, too often we're looking at housing policy in a silo. We have the housing affordability group over here. We have the homeless group over here. We have the eviction group over here. And we're often pulling from the same pool, yet we're not talking about the issue and how we can move strategically together. And so a research that I would be interested in getting is really understanding how much funding is actually available at the local level. And that does not just mean federal dollars coming in, because we know over time those federal dollars have been on the chopping block. What general fund dollars are available, right? What dollars are coming from the state level, because it all works together, you know, for us to see movement of Black home ownership at the local level, and also how state preemption comes into play with that. Because no matter, coming from a background in local government, you know, they say local government is very creative and we come up with these creative policies and tools. It's because we have to work around preemption. You know, and so how can we, one, as Samuel said, have the political will to talk at the state level with local elected officials to talk about the issues of housing and how they're connected, you know? And so really looking at this system level of approach instead of just focusing on one policy area, but how does it affect everything that's going on? And then layering that with the discrimination that has happened over time and still happens, you know, and really thinking through the types of policies that we put on the table and not necessarily limiting just one type of policy tool, just like down payment assistance. Why can't we have down payment assistance and closing costs, right? And in terms, I really like that slide about maintaining housing, because that is where you begin to have a lot of issues in terms of like, can I not only afford to pay my mortgage, but can I afford the repairs on the house? Can I go through this natural disaster and so forth? So I'll leave it there.
Thank you so much. We're going to go into our last round of questions, and this is really around the what ifs, the recommendations, the policies that you think are needed to alleviate the barriers to minority homeownership and achieve greater parity. Is it through the Fair Housing Act? Is it through Community Reinvestment Act? Is it through state, county, and municipal governments? Is it through realtors associations? What are the solutions that will solve this issue?
All of that. All of that. I mean, it's you know, from not working in silos to coming together, because and Dan Curry made a great point. Let's not leave out, you know, minority builders, okay, Black builders. And based on my almost 30 years in real estate, you make a very good point. Most time, Black builders have a market and they are Black potential home buyers. So there's something to be said there, and that requires federal and state money. So that's the first thing. Let's get some more inventory. Let's support the small builders, because that right there will lead to more home ownership. That's a big deal, but it does involve everybody. It takes a village to raise a child. It's going to take a village to fix this problem, and it comes from CRA, realtors, federal dollars, local dollars. All that's got to come together to give a comprehensive fix to this program, and it's not easy.
Sophia, you hit the nail on the head. It's supply. I mean, we've been talking about this, you know, for years. Hopefully, with the rising interest rates, the housing market cools a bit, and we do get some supply coming back in. But one of the things we've seen success with on the West Coast, but it's been less. We've been less successful on the East Coast, is around manufactured housing. And that's something that we're very focused on, you know, making sure that folks understand the manufactured house of today is nothing like what people may remember of manufactured housing in the 70s, 80s, and 90s. And add to that, we also have another type of program called Manufactured Housing Advantage, MH Advantage, which is a program that certifies these homes are built in such a way that they very much look like a traditional stick-built home. And because of that certification, Fannie Mae will provide traditional financing without any hits on rate and that kind of thing. And we've, again, had a lot of success with this on the West Coast, but it hasn't been embraced as much on the East Coast. And I feel like maybe part of that is old perceptions around manufactured housing, which is an educational thing, which we could also focus on and honestly drive some changes in supply based on that.
I think it's already been mentioned quite a bit that we need to better target the population that we want to serve. So I think Sophia's example really gave a good story about how a more targeted approach could really help benefit Black households that we want to serve, and then the special purpose credit program in that sense have some potential. Just on the CRA, it's like CRA was intended to combat the negative impacts of redlining, but then even after 45 years later, we don't really see a decline in the Black-white homeownership gap. And we did some research on this, and what we found in the data is that, okay, so for the low income households that are CRA eligible, we actually see that low-income minority neighborhoods get less loans than low-income white neighborhoods. And within the low-income minority neighborhoods, low-income white borrowers get more share of the loans than low-income Black borrowers in that minority neighborhood, suggesting that if we just have only the income limits, it might not really be a good target for reaching to the Black borrowers that we want to kind of help to increase homeownership rate. One of the things that we did look into is whether it makes sense to have a first generation target on the down payment assistance program. So right now, a lot of down payment programs, especially the federal grants, just have 80% AMI limits. And if we do that, we estimate about 40% Black and Latino population would be eligible for that loan. But then if we actually increase the income limits to 120%, showing that even among the moderate middle income minority households, a lot of Black households are struggling to become homeowners. So we expand the income limit, but then we also implement another criteria saying that your parents also have to be a renter. So you have to be a first generation homeowner. So if we have that criteria on top of the income limit, we actually see that the share of Black and Latino households who are eligible increases from 40 to 60%. So 40% for just 80% AMI eligibility criteria to 60% if we impose the first generational criteria on top of that. So this really does suggest that we do need to have a better targeting approach to reach out to the population that we want to serve, because income alone will not really can be effective enough to reach out to the Black community.
I think that might be a good segue to talk about CRA quickly, kind of in response to targeting. Really, NCRC really is advocating to ensure that institutions are thinking more critically about markets that they're not serving, but we are also evaluating them on making sure they do, right? So we're advocating for more race-conscious, race-focused kind of CRA work. And part of that includes thinking about reforms around how we measure or assess lending to people of color, so that ratings are not inflated, right? But that we give more weight to whether or not the percent of loans, for example, or the activity in community development lending is actually supporting people of color. We're thinking about how we are kind of how we can redefine assessment areas, how we can think about not just evaluating banks towards LMI tracks, but thinking about underserved census tracks, right? So there's a lot of kind of interesting nuances and reforms within CRA that I think could get to the earlier point mentioned around targeting in some ways.
And I would just ask, or just say we have a once in a generational opportunity with the American Rescue Plan, specifically the state and local fiscal recovery funds. And if we want to begin to move the needle forward, I think there should be conversations happening at the city and county and state level about how we are really addressing the issue with housing supply and home ownership, and how can we do that through a racial equity lens. And so really, talking, there is a whole planning process or public engagement process with these funds. So this is an opportunity to put some of the solutions on the table and really begin to see change in the communities.
So I'll add to that real quickly, Lauren. You're right. I think now it's a really critical time. I just mentioned a minute ago, obviously everybody's aware interest rates are rising. So what's happening is you had loan officers in the past who were making a good penny off of refinances. So those refinances have pretty much completely dried up. You're starting to see lenders make tough decisions about right sizing. If I'm a loan officer and I don't want to get right sized, I'm going to start looking for other ways to get loans. And that means they're going to start looking at more affordable programs than they've done before, because traditionally those have been a little bit harder to originate, but they're a loan. And so I think you're right, Lauren. We have monies over here and opportunities over here. Now you've got the market that's also saying the same thing. But this doesn't last long, because if those loan officers don't understand how they can drive that business in, they're going to get right sized, because that's just how the market works. But we're in a unique situation probably for the next 6 months, depending on what the market does, for us to really educate loan officers on here are some other ways that you can drive business in. And so I think that it's kind of critical for us to think that way.
And I would also emphasize that 19,000 cities, towns, and villages has access to these funds. So it's critically important that you're really working with your local elected officials and really using it in a way that benefits the community. And in this case, specifically Black homeownership.
I want to add to that. So I chair the Housing Recovery Support Function of North Carolina State Disaster Recovery Task Force, which has helped advise the state on how to spend their disaster recovery funds post Matthew and Florence. So we're in the middle of talks about a down payment assistance program using those funds for folks in impacted counties who were impacted by the storms, right? That's a conversation happening. We're obviously having a lot of conversations right now around state and local fiscal recovery funds. We're back to political will, right? And so that on one hand, and I think some of the frustrations we've seen from providers around the state, once we got the final rule from Treasury, it wasn't really helpful for a lot of affordable housing programs, the ways that folks had wanted to use those funds. It was a challenge. And so it's been a lot of frustration around that point, but there is still incredible opportunity, right? So that's one. The other thing that I want to say is, as we target, because whether it's emergency rental assistance in the state, whether it's down payment money, whether it's whatever, if you target too specifically and build a matrix of rules and hoops to jump through, no one will be served by the program, and folks are going to burn out. We saw that with emergency rental assistance, the first iteration of that, of the HOPE program here in the state, that some of the challenges, that the roadblocks that we throw into our way as we try to target more specifically. So it's a dance that we do on the policy end, but before you get to, again, the design, you still got to address this political will issue. And as we've seen with the state and local fiscal recovery funds, we got towns and cities and villages with a long list of priorities, from water infrastructure all the way down, that are real, that are absolutely real priorities. And the difficulty we have in making it work for a number of these desired affordable housing interventions means that a lot of local governments who don't have a lot of capacity to think creatively or expertise to think creatively on this issue are going to the things that are easiest to do. We're going to pay salaries. They can do that. They can pay, give folks bonuses, pay fire, police, and right. So they're going to those easy things that can make their balance sheets work. And so on up through the line, as we design things from federal agencies on down through state agencies on down to local governments, ease of access is a big deal, because it can mean the difference of the folks who you want to be able to access a resource getting it, and everyone being frustrated and getting to a place where none of this works and you abandon efforts to change it. So that's something I want to throw into this, because targeting is absolutely necessary, and you can't overcome what has been a racist intervention by a broad spectrum response, right? You have to be specific to combat something specific. But in doing that, and going back to the way that our organization came to being in the 80s, right? Another way to kill really good interventions is to make them so difficult to implement that it takes too long to get the help out there. Yeah. So it's another piece of this that is I think critical as we design and implement interventions.
Amen, Pastor.
We're going to move now to questions from our audience. Dan Curry sent in a suggested question. Dan, do you want to ask it out loud?
Okay, thanks, Stephen. Yeah, the question was a little more about the building and product side, and how important is location and who's building the product. I've spent a lot of my time trying to figure out how to get homes built in lower wealth communities of color. It is not easy. The margins are so much thinner for builders because prices are depressed. So it takes a whole different setup to make things work. And then who the builders are. And as Sophia mentioned, I'd love to see some data. I don't have any data, but I'm guessing from my experience that if you've got a Black or brown home builder, they're much more likely to sell to a Black or brown family. It's just, they're running in cultural circles. They know friends, they go to the same churches. There's just a lot of community connections. And if you can grow more builders that have a connection with the folks that you want to buy the homes with, I think you're just gonna, you're gonna be a lot further ahead. So how do we support, what's the support system that is needed locally to grow more Black and brown home builders? And that, to me, that's very important and work that needs to be done. And I mean, we should be using some of the current funding available to do just that, and we're probably not, which is pretty depressing. So I'd love to hear any ideas from the panel or suggestions.
I want to jump in on this one, because you talked to the home builders, and we're looking at average age in the trades, carpenters, plumbers, in the 60s, right? Nationwide, it is a fast approaching crisis in terms of the building trades. And what you heard from Michael, and many of you have probably read in the last couple of weeks, interest rates, so on and so forth, right? Some of the story of the building industry has been they haven't scaled up operations because they are anticipating a slowdown, and they remember what happened back in 2008, 2009, 2010, and they don't want to have to scale up and all of a sudden we're bankrupt again, right? So you've got all of that is in the process. And I'll say from my role on the disaster recovery side, one of the challenges we found in particular in Eastern North Carolina, and some of you may have seen some media on this in the last couple of weeks, it is impossible to find someone to do the work. The money is there, the homeowners need the repairs, can't find builders in Eastern North Carolina because they're all in the Triangle and in Charlotte and in the where the buildings happen, right? Because there's so few of them. And one of those challenges is licensing and bonding, right? In order to qualify as someone who can be a builder that does that work, you need a particular pedigree, some history in this, and some licensing, right? And even though there may be folks in the area, like I know John down the road, he can do this work really easily, but John's not licensed and bonded, right? And so he can't receive CDBGDR money. So it's some of those challenges that we're trying to figure out how to increase access and opportunities for folks who actually do this work to get the kind of accreditation they need to be able to access the resources that are coming in.
Yeah.
And to piggyback on what he's saying, so yeah, they're all in the triad and the triangle, but they're also building at a different price point. What that foreclosure crisis did in 2008 was take all the affordable builders, D.R. Horton, Wade Journeys in this area, and move them to a different price point, and they never came back. And they never came back because they weren't making as much money. So it's a twofold issue. It's access to them. It's access, to Dan's point, to being able to build, and then building something where you can make a living. And it is not below $250,000 in this area. I can't speak to Charlotte and Raleigh. I think in Durham, those markets are even higher, but it is a huge problem.
And I would say, how are you working with your local elected official or your local housing department to, one, talk about this need and perhaps create a pipeline or a technical assistance program that could be created with either local funds or federal funds to build this pipeline, as well as the need for mentorships as well. Those who are more experienced, helping those to really understand, and also eliminating barriers related to it. I will say, I really have a passion for public service and working in local government. It's a long process. Change does not happen overnight, but with the right conversations and persistence, you can begin to see a lot of things happen at the local level. So I really do encourage you talking with your mayor, talking with your local elected officials, joining a board and commission, proposing ideas at the beginning of the CDBG process, saying we need this. This is the data we have in the community, and this is why we need to address it. Creating that pipeline program. Even if your local government does not have the capacity, what pass-through dollars can go to a local nonprofit to create this program. So just really using working at the local level to begin to see the change you want to see, instead of saying, okay, here's the problem, but not creating that solution that is out there.
I think we have time for one more audience question. Is there anybody that would like to jump in? Andrew, you usually have something.
I'll take a crack at this, Stephen.
Okay.
And I think maybe your panelists have answered a lot of issues and questions about the local scene and what can be done on the local scene, especially with on the private level and on the real estate level and all that kind of stuff, and even to the point of the municipalities. But is there anything that panelists can think of in regards to I guess what I'd see as the unlevel playing field? If investors have the cash ready, there's just, up the road, house closed in 3 or 4 days. And I know other houses can close quicker than that. My guess is going to be it's an investor group. So it doesn't look like it's a very fair place where Black families or other families even have a crack at that. Is there any thing that can be done on the local level to at least try to make those houses affordable available to folks before they get beaten out by investor groups?
I'm going to use the model of Atlanta, Georgia as one. Atlanta, Georgia, they have a land trust, and they work in coordination with their land bank, particularly around the Atlanta Beltline, as to when property or housing become available. And I dropped in the link about how localities can work with community land trusts to, one, hold the land until a homeowner becomes available to purchase it. That's one. Also talking with your local government about land disposition or what they want to do with the property. Can it be available to a nonprofit like a Habitat or a community land trust to do something that creates lasting affordability? But you have a lot of cities who are getting into this space of really thinking through the property that they own, but also how can they create lasting affordability over time. And so Atlanta is a good example. Houston is another example. They created their own land trust, or they created the land trust, and they work in tandem between creating a municipal program to support the land trust, as well as working in concert with the land bank. And those are highlighted in the report that I dropped in the chat as well. We also have a help desk on shared equity home ownership that's offered to our members, where you can ask questions in more complex details. And we have someone that can help you kind of think through how to create this lasting affordability instead of just leaving it up to the market.
Sophia, I know that you had mentioned at a previous meeting banning the box for indicating the type of funding that one has. Is that still a thing that you're working on?
Well, so they took it off the contract starting July of 2021, but you know, they've added something else to the contract that still indicates that they're getting assistance. You know, I actively, thank you for bringing that up, advocated that was being used to discriminate, and not so much racism, classism. Who says that because you need down payment assistance, you're less eligible to buy a home or less worthy of an offer being accepted? So yeah, they took the down payment box off, but now they've got some other things in place that still make it so, you know, agents know who's getting down payment assistance and who's not. But one of the things that I advocated for in a realtor Facebook page, and been a huge person talking about down payment assistance, does not mean that the process takes longer. It just means that the person needs some assistance. And don't, you know, for lack of a better word, don't get it twisted. It doesn't mean that your property is not going to close in a quick manner, because the down payment assistance works simultaneously with obtaining the first mortgage.
Any other ideas around making a more level playing field?
Yeah, I think zooming out, land use decisions are the game, right? The land use decisions that local governments are making have built our neighborhoods. And again, this goes back to how we think of ourselves and the world around us. And because we've grown up with the systems we've got, we think this is the way they have to be, right? And that they are just natural, but they are not natural. They are engineered, right? Our neighborhoods, the way that we have constructed our communities, our cities, they are engineered that way, right? And so I mean, we're here talking about home ownership in particular, right? But you're not a homeowner until you become one. And there's a journey long before that. And having a sufficient supply of affordable housing that doesn't take up your whole income is critical to being able to be in a position, right, to do this. And I know that, having come from the Habitat world, there are a number of Habitat affiliates who have considered doing the heretical thing in the Habitat universe and building rental housing so they can help their homeowners that are in a pipeline get ready, because they can't find affordable housing out in the market. Right. So I think that thinking, especially, I'm in the Triangle, I live in Durham, right? So affordability is top of mind here because of growth and how out of control the prices have been over the last couple of years. And if you're in a growing community, density is the game. And if you're not doing it, land use, any kind of housing bonds, whatever, is going to get less and less impactful. And so I think that's a really significant piece of this puzzle. Yeah.
Joshua, I think you were about to unmute and jump in there.
Yeah, I'm not super privy to kind of local solutions that are impactful, but I'm often inspired by Minneapolis. They're doing some interesting work around right to refusal policies to give residents kind of first pick at purchasing a property if the landlord is facing pressures of selling the home. I know that they were studying this work and seeing if it's impactful. Whether or not it is don't quote me on that, but it's an interesting model maybe for more. They're also doing some interesting work around their naturally occurring affordable housing. So though we were talking about new buildings as it relates to supporting home builders of color, thinking a lot about how the state of Minnesota primarily are putting together finance models and funds to actually support acquisition of affordable rentals and properties, and supporting the rehabilitation of those properties for builders of color. So I just wanted to point out that Minneapolis and Minnesota is an interesting model to explore for those who may be looking to get inspired.
And I would, oh, sorry.
Go ahead, Lauren.
I would add DC to the list. They just recently launched their Black Homeownership Strike Force, which I am looking forward to see the progress on that, as well as DC has a housing production fund as well as a right to refusal. So again, not necessarily focusing on one tool, but how can we take a multi-pronged approach to really addressing the issue.
And I dropped in chat earlier the 3x30, which is an initiative that's going on now with the National Association of Realtors, and they have some target markets that they're working in, and I think they're going to be pushing some dollars in those markets to see how it goes, so we can broaden it and get 3 million new homeowners by 2030.
I want to thank all of our presenters today, as well as our audience, for joining us. Sophia Crisp, Dr. Jung-Hoi Choi, Lauren Lowry, Joshua Devine, Michael Wallace, and Samuel Gunter. We appreciated all of your thoughts and input on this important matter. Again, next month, I believe Bruce and the Center for Housing Community Studies will have an additional forum on this same topic. So look out for emails and information from them. I did drop in the chat the link to the policy page articles. This presentation will be posted there. The materials that you've seen today will be posted there, as well as our YouTube channel, where you'll be able to find a copy of this video. Thank you everyone so much for joining us. We'll have another colloquium in September, I believe, and we'll be sending out more information about that as we approach. Thank you, everyone.
Thanks, everyone.
Thanks, everyone.